A new era of trade has begun as the United States, under the Trump administration, implemented a 10% baseline tariff on all imports starting April 5, 2025. This decision marks a significant shift in U.S. trade policy. This baseline tariff will be applied to all goods entering the country. Additionally, steeper tariffs ranging from 11% to 50% will be imposed on around 60 countries starting April 9, 2025. These tariffs are designed to protect American industries and workers. The administration argues that these measures are necessary to address unfair trade practices. The goal is to encourage domestic production and reduce the trade deficit. The implementation of these tariffs has sent shockwaves through the global market. There is growing concern among businesses and economists about the potential impact on global trade. The tariffs are expected to increase the cost of imported goods for American consumers. This could lead to inflation and a decline in consumer spending. The administration maintains that the tariffs will ultimately benefit the U.S. economy. The global markets have reacted swiftly to the implementation of U.S. tariffs. The stock market has experienced significant losses, reflecting the uncertainty and volatility surrounding the situation. The S&P 1500 index has plummeted, losing nearly $6 trillion in value. This decline is indicative of the widespread concern among investors. Despite these market fluctuations, U.S. officials have downplayed concerns. Treasury Secretary Scott Bessent dismissed fears of a recession. He characterized the situation as an adjustment process. Commerce Secretary Howard Lutnick confirmed that the tariffs will remain in place for the foreseeable future. The administration remains resolute in its stance on trade. The international community has expressed a range of reactions to the U.S. tariffs. Some countries, such as Taiwan and Indonesia, have stated that they will not retaliate with tariffs of their own. They are seeking dialogue and negotiation to resolve the trade dispute. Others, like Vietnam, have appealed for more time to adjust to the new tariffs. China, a major trading partner of the U.S., has responded with retaliatory tariffs. They announced a 34% tariff on all U.S. imports, escalating the trade war. Other key allies, such as the United Kingdom and Canada, are trying to avert a full-blown trade war. They are exploring alternative trade agreements to mitigate the impact of the tariffs. Within the United States, the tariffs have been met with mixed reactions. The administration argues that they are necessary to protect American jobs and industries. However, critics argue that the tariffs will harm consumers and businesses. Large protests have erupted in major U.S. cities over the weekend. Economists are divided on the potential impact of the tariffs. J.P. Morgan estimates a 0.3% decline in U.S. GDP for the year. They have revised their earlier growth projection of 1.3%. Additionally, they predict an increase in unemployment rates from 4.2% to 5.3%. The coming months will be crucial in determining the true impact of these tariffs. The global trade landscape is likely to undergo significant changes.